Welcome to the Chasing Freedom Show. I'm Noah Evans, and on this show, I'm going to creatively break down real estate deals with top investors across the country to help you become closer to achieving financial freedom. Alrighty, let's get to it. What's up, guys? Welcome back to the Chasing Freedom Show. Today, we've got another awesome round of guests. This episode is going to go over the process of going from flipping 100 houses a year to moving up into bigger asset classes. And our guests today have done over $25 million in syndications in their first year of climbing up from the fix and flip realm to the apartment realm. So guys, welcome Leigh and Victor today. What's up, guys? Thank you for coming on.
Hey, Noah, thanks for having us.
Yeah, thank you.
Absolutely. I'm really excited to have you guys kind of talk to the guests about your journey and what the last years looked like for you in business. We also have some mutual friends. My friend Shannon from my mastermind class has been a guest on the show, and you guys are partnered with her in the fix and flip business, right?
Yes, and also in our syndication company.
That's cool. That's awesome. Shannon is such a go-getter, and I'm so inspired by everything she does. So I can't imagine like the collaboration that you guys have all together.
Yeah. We're so happy that she introduced us to you.
Yeah, absolutely. So let's dive into your journey. Tell me a little bit about what you guys were doing before real estate and even what you might be still doing now outside of real estate and what that process looked like when you started.
So I'll tell you a little story about how we got into real estate.
Mm-hmm.
So Victor and I met in medical school in Washington, D.C., and we got through school. We worked really hard, and we graduated with about $300,000 of student loan debt. So we, lived below our means, worked 80-hour work weeks, nights, weekends, holidays to just pay off those loans over a 3 to 4 year period. And we were so excited because we achieved that goal. But in the process, we burnt ourselves out.
Yeah.
So
80-hour work weeks. Yeah,
in school, we were totally burnt out. So we decided to just hit a pause. We packed up our small apartment, we put everything in storage, and we took off for a year to go backpacking around South America and Southeast Asia. And during that process, we really got to pause and reflect and just realize that we wanted more out of life. And there was more to life than working 40 to 80-hour work weeks.
Yeah.
And so we knew we wanted to make a change, but we didn't quite know what that was.
Mm-hmm.
So when we came back, we decided to move down to Virginia Beach, really like the area, and we bought our first starter home. So we went back to DC, we got our stuff, we closed on the property, we came back, and that very same day, we opened the door and a pipe had burst in the wall, and the entire first floor of the house was flooded, totally ruined, and we were pretty devastated. But looking back at it, it was really probably the best thing that has ever happened to us,
Mm-hmm.
because that is where our real estate journey began.
Yeah.
That's insane. So you guys are gone for this entire year-long backpacking trip. You come back home, the entire house is just, I'm sure all your furniture ruined as well. So you're coming back to a fresh start unintentionally. So what did that inspire you to do next? Like, how did that push you or motivate you to decide, like, we're going to go start fixing and flipping houses?
Yes, that's a good question. So with that experience, we kind of, we're both in medicine. So we're kind of like, systems-based, organization-based, algorithm-based. So we kind of started, problem solving, figuring out, man, how are we going to fix this place up? We didn't know anybody in the area. And so we started connected with contractors and agents and people that can help us, guide us in getting this property back to a good living condition. And we did such a good job on that renovation process that actually turned into our first flip, our live-in flip. And we turned around and made a solid profit on it. And when we look back, we were like, hey, why don't we just try to replicate this again and see if we can just do better? And so, 1 became 2, 2 became 4, 4 became 8, and then here we are today.
What does your team look like to flip the volume of houses you guys are still currently flipping?
So Victor's project manager and
Mm-hmm.
oversees a big crew of contractors that we have built. And then we have, our realtors, our wholesalers, the deal finders. Um, and that's really the team.
Right. And our attorneys, our accountants, I have everybody around us. We have a large group of contractors that work directly for us to sustain that volume.
What I love about that is I think so many people are plagued by the idea that if they wanted to do volume flipping, they have to build this massive internal team. And with that comes huge overhead, $40,000, $50,000 a month in salaries and payroll and office expenses to be able to do that. But you guys just prove the point that you don't have to do that. And what's beautiful about your business model, in my opinion, is that you guys can scale up and down without having to make any really, really hard decisions, right? If you decide, hey, we're going to go flip 10 houses this next year because the apartment syndications have done so well. And we don't have the time to flip, 100 houses anymore. We're good with 10, with 15 or none. You guys have that ability to scale up and down without having to readapt an entire team, which is, I think that's something that not enough people are talking about with how fast the market is changing and we don't really know what that means. Somebody has a crystal ball. That it could mean nothing. It could be a little blurb and it's just panic. It could actually be conditions changing permanently or for the next, cycle. But I love that your guys' business is flexible.
Yeah, I
Thank
mean,
you.
when mentioning that, you make a good point because we built this model of, kind of two wheels working simultaneously.
Yeah.
And the high volume fix and flip. And my wife can talk to you hours about this in regards to taxation on that short-term capital gains. We try to shelter that by adding in the syndication and depreciation deduction side of things. So all of the investors that are behind us are benefiting from both pots at the same time.
That's
They're
cool.
high volume returns, and then it's sheltered by the syndications. And so we just keep scaling and growing that way and building that wealth is what we call it. It's not cash. We're building legacy wealth. We're chasing that freedom for everybody for the long term. So everybody that's with us has entered into our program knowing that they're going to be a part of both wheels and benefit simultaneously.
Can we go granular there and talk a little bit more about what that actually means? Because I think we went high level really fast, and I just want to slow that down and break that apart for the listeners, because I think that what you just broke down is a gold nugget. So guys, if you're listening, this is the part I would go back through, re-listen to it again, write down some notes. So you've got these two wheels. What does it look like? Let's say I want to be an investor with you and I want to partner with you on a deal. How are you helping me through the two different wheels?
So we're helping people do essentially what we've done for our own business.
Mhm.
So flipping is a really awesome way to quickly build capital, as I'm sure you know, but it is taxed really heavily with capital gains. So a way to offset some of those capital gains taxes, if you have rep status, is to buy the rental properties, use that depreciation and offset those gains. So that's really how we've built. We've been flipping houses and buying rentals all along. So with a lot of our investors, we're helping them build really fast, quick capital flipping, but then we're also offering them investment opportunities as LPs in our syndications.
I love that. And so in the flip model, what does it look like for the investors to invest with you? Are they covering your down payment? And so you're using, I like to call the term opium, other people's money. Is that how that model works on that side?
Yeah. Depending on deal per deal is different. Sometimes our investors are all cash. Sometimes they're 50-50. Sometimes they're, limited partners with hard money involved. We have to carve it out different ways per investor, depending on their capabilities on that side of things.
Yeah.
But turnaround is so quick on the projects, as you guys know, that, most investors' returns are coming back very quickly to them. And by the end of the year, once they get, their interest only 1099s coming in and they're like, whoa, I didn't expect all of this. We say, well, don't worry. We got you a sheltering program that we're going to enter in. And so hopefully all that capital, or at least passive cash flow, comes back to you.
Yeah. Okay. So let's say, someone's got 100 grand that keeps cycling through deal after deal with you. And at the end of the year, they've made an additional, 10 to 12% on their money for investing with you. All of a sudden they go, well, shoot, I'm gonna have to give almost half of this back to the government in taxes. And you go, well, no, not quite. if you take some other money or you take a portion of that investment, you roll it into these longer hold assets, these long-term assets, the apartment syndication side of your guys' business, you're able to kind of shelter that income through the depreciation of those larger assets. And so they're essentially going to significantly reduce their tax liability, right? Or sometimes I'm sure even eliminate it.
Right, exactly. And that's how we're trying to, like I said, run our own lives as well.
Mhm.
I think it's just a great strategy for everybody.
Yeah. So I'll share a funny story about this. And it's just, it gets interesting when you start doing real estate at volume, right? So last year we had set aside probably like just shy of like $3.5 million worth of single family homes that we were going to keep, which by the way, is not very many homes in Boise, Idaho. That's like 6 houses. So it's just, it's not that crazy. But so we were going to keep all of them or set some of them up as Airbnbs. And then we had some major changes to our business and to the organization. And so we then decided to actually sell all of them. Sold all of them. So this created a really bad tax problem for me, right? So luckily my CPA is pretty creative. We still cost seg depreciated those homes for 2021, but it creates an issue for 2022 because if you sell, you're then required to recapture that in taxes. So the interesting thing about like planning with your CPA, and I think you guys probably have an amazing CPA. I think it's really important to hire somebody who knows what they're doing here. Is my CPA goes, let's kick your tax liability down the road till next year. But in 2022, if you don't buy an asset of equivalent value to be able to then, go back through again and cost like this next asset, you're going to be in a world of hurt. So it's like, it was funny. I found this 27 pad mobile home park. It's just entitled land. Do I really want to do it? No, but I actually have to at this point because I'm so far into the year already. And I don't pick something up now. I mean, the commercial assets can take 60 to 90 days to close. So it's like, yeah, now we're doing a mobile home park, which is kind of out of my realm, but it's that, or I pay the government 200 grand. So
Right, yeah.
Yep.
So many different ways to carve it out in real estate because it's so tangible. You can buy it, you can hold it, you can wholesale it, you can flip it, you can cost seg it. You can do so many things that technically you're not losing, you're just deferring. We follow that model of buy, borrow, and die. You
I
really
love
want
that.
to, even though we're doing the fix and flip side of things, we focus on generating and building that wealth for the generations of the future in our family and with our investors. So you can carve it out in so many different ways because it's tangible. Right now with the craziness of our world and the market and stocks and equities and crypto and everything dropping, we're still pretty solid in real estate. And I don't even look at it as being anything like we're actually in a deficit. So it's going to just get sweeter, whether there's going to be some relative adjustments, maybe. But if one wheel is kind of on flat, the other one's on hyperinflated when it comes to the apartment building, rental income, cash flow, appreciation. I mean, you can carve it out so many different ways is what I'm saying. It's beautiful.
Yeah.
Sometimes I don't even believe it myself, but it's true, right?
I think it's interesting too. The one thing I've found as a common theme amongst investors and high income earners is a lot of people will start somewhere because they see this path to move forward and build wealth. And a lot of times they're not really building wealth. They're really just building they're rich, but they're not wealthy, right? Their vehicle takes them up the income chain really fast, but they have to keep fueling that vehicle and they have to keep manually driving that vehicle versus to me, real estate is it's like a Tesla with autopilot, right? Like once you get that car going, it just continues to drive. And that's what real estate has done for all of us, right? Like it takes time to build, it takes energy, it takes effort. You have to put a lot in up front, but once you get it going, it just continues to go. Appreciation, loan pay down, the cash flow, rents rise. I'm curious, I want to pick your guys' brain because you're so heavily involved in your market. What are you guys kind of predicting over the next 6 months? What are you looking for? What are you concerned about? What are you excited for? What do you guys think the market's going to look like?
It's a great question. I think everybody's wondering that one. We're in Hampton Roads, Virginia, and we're a highly concentrated military area. So I think that this area will be hit a little bit less than others with this recession coming on. But there's still, like Victor said, there's a housing deficit, there's a housing shortage. People need a place to live. Rentals are hard to come by. So we don't foresee rents going down, and we don't foresee real estate prices dropping.
Yep.
And
The rental
yeah.
relief program has expired. There's deficit in opportunities. There's going to be less money out here playing because hard money is going to be difficult. Lending has become extremely difficult, especially on the larger level properties you buy. So you really have to have sponsorship, liquidity, net worth to get into that game. Everybody's always worried about the unforeseen, the crystal ball itself. Rates are going to go up by the Feds. They're going to raise it again, and again and again to try to combat inflation. They may trigger a recession. But when it comes to the real estate market, outside of 2008, which is an anomaly of our lifetimes, right? Real estate usually does better in these times because every other asset class is just so volatile, right? And a click of a button, I can buy, crypto, and then I can sell crypto. So the volatility is going to be less. It's like a slow moving ship. And so once you select your markets, if your market is more stable, like ours here with a large government contracting, military contracting, the biggest employer in the country, we believe, at least in our side of things, is going to be more stable. The larger hit areas are probably going to be those larger areas with like high risk investments or high risk lending where it's adjustable rate mortgages or high rate, hard money notes that come due, because that's just going to keep rising with the Fed's rising. So, underwrite well, stay conservative on that. Do your market research. Don't be afraid to step out of your own comfort zone as long as you have strong partners or boots on the ground that you trust, because there's different ways to play the game. But right now, going forward, it's likely going to be the smarter, more experienced operators, people that can actually know how to adjust the levers to keep the ball rolling forward, because the game doesn't stop.
No.
Good market, bad market, it does not stop.
Yeah. I want to reiterate that, like, the best investors, the people that are in this for 10 plus years, or even people that have started more recently, but they've accelerated their learning curve by partnering up with the right people, or they're just amazing operators, right? They don't time the market. They buy when it's good. They buy when it's bad. Parameters change, your dials change, you pull different levers. Leigh, I want to ask you, since you guys are in two different asset classes, you're both in single family and large multifamily. Are you guys shifting some of your levers one way or another with the unforeseen changes? What do you think the changes will do in relation to rents?
So we believe that rents will continue to go up
Mm-hmm.
because of the limited supply, and we're putting a lot of focus into multifamily these days and into our rentals. We're still doing the flipping a lot, but a lot of our focus these days are with the multifamily acquisitions. 2022 has been a great year. So we closed our first big multifamily deal, a 62 unit at the beginning of the year. And that so far is going great. Rents are actually higher than we had originally projected. So, and now we're about to close on another 75 units in Virginia Beach. And same thing, rents just seem to be going up.
Yeah.
But if we don't, our underwriting is conservative. So we underwrite in a way that doesn't assume things will just keep rising. So if it does rise, it's just icing on the cake.
Extra.
And on that note, closing on, this large multifamily portfolio during a time of crisis has been an extremely humbling and learning experience, because once, the Feds came in and raised the rates, all hell fell loose with regards to banking and lending. All the banks were like, they stopped, and they're like, everything started changing overnight. Yeah. So we started making adjustments, got on the phones with our teams, our brokers, our mortgage brokers, our banks, adjusted our lending loan to value, raised a little bit more capital. We controlled our renovation plan because of cost of materials, labor. We were able to dial that back more, knowing that, we're going to be able to push rent organically anyways. We want to do what we do normally, but we don't need to over renovate. And so we had to change some dials, alter some things to get the plan to flow forward, because the crisis and the anxieties are right now. but 90 days, 1 year, 3 years, 5 years, it's going to be behind us.
Yep.
But we want to look towards a future of growth and building. So we can't be afraid and overanalyze. We have to trust in our underwriting, our teams, our experience, and trust that in history shows us that, like I said, this just keeps going forward. It doesn't stop. It just keeps going forward, trucking away.
The interesting comparison I like to make for like people who invest into my company, my flips and stuff like that, is that real estate doesn't go to zero. It can't, because there's always value in a place to live. Crypto, stocks, the venture capital world, all these things can go to zero based off decisions people make. I could be the worst flipper in the world and make a house in worse condition than when I bought it, and it's still going to have value, right? So I could buy a $300,000 house, got the wrong walls, the roof caves in, the whole thing's basically worthless, right? As far as the structure goes. The land's still probably worth $150,000. So yeah, I got a $150,000 loss, but no matter what, the whole thing burns down. The insurance company comes in and gives me a valuation and I get to build a new house. There's still always value there. Find me a stock that the CEO could get caught in some wild scandal and plummets the company, and then they find out they've been hemorrhaging money, and that goes to zero very quickly. There are no stocks that will maintain a value no matter what happens in the market or with the people running the company. We operators can literally burn the house to the ground and there's still value in the land. It's just,
yeah, and a great point with that. The other thing with real estate is that there's multiple exit strategies.
Mhm.
If you own a stock, there's only one exit strategy. All you can do is sell it.
Yep.
But with real estate, there's a lot of different things you can do. You can improve it, improve the value. You can sell it. You can refinance it. You can hold it. You can rent it. You can do so many different things. And you have to know what decision to make based on the situation.
Yeah. Well, so you guys had mentioned some of your underwriting and be conservative on the multifamily side. And I want to pick apart some of those different things that you guys are doing. So right now, with not knowing how the next 6 months, a year looks, what are you guys, do you have some metrics you guys can share with us? Like, are you saying you're expecting rents? Are you predicting rents to drop 10%? Are you predicting them to be 10% higher? Are you saying they're not going to change? What are you guys looking at as far as the future utility of cap rates on these multifamily homes you're buying, or multifamily properties? Are you putting in extra parameters to prepare for lenders to be more difficult to work with in 6 months? Just break that down for us.
Exactly. So a big thing that we're looking at these days is cap rates and exit caps. So right now, the market here is selling at high 4s, low 5 cap rates, and we're projecting a 3-year exit around a 6.
Oh, okay, I like that.
Probably won't happen based on historicals with interest rates, but that's what I mean by trying to be conservative. So if the deal will cash flow for all of my investors at that level and we beat it, that's even better for my investors.
Absolutely.
Cherry on top.
Yes. Yeah. And that's how you get them so excited about investing with you that they tell all of their friends, right? They're like, oh my gosh, Leigh and Victor said we would make this much money and we doubled it. And then maybe that's not realistic. I don't know that I've ever like doubled my investors' money, but if they get an extra 10, 15% on top of what they thought, it's pretty freaking exciting. But that's a very sophisticated thought you guys just shared, which is to it's hard when you see a deal, especially as like a deal junkie, right? Like we just chase it when we want to do it, but to underwrite it conservatively enough that it still pencils. And then to know that if all things go well, you'll make even more, or you'll do even better, or your terms will be better. That's a hard thing to do for a lot of people.
Yeah. And some things that we look at, rental growth, which is all projections, the market right now is crazy, but we underwrite for 3% annual growth conservatively. But last year, our market jumped up 17%. Things like that, there's no way you can judge. But as long as you stick to your standard of looking at opportunities and don't fall into the, fudging of the numbers to where you put yourself in a bad place.
Yep.
I usually tell my wife, I like to sleep at night. So if I'm not sleeping at night, we're not doing things right. We want to make sure that everybody's asset and investment is protected for the long term, and focusing on developing the systems that will carry us through good and bad markets. We can really fight through all that.
Yeah. I think that must be a correlation amongst doctors. that they like really like are strategic and value their sleep. Sometimes I compare my wife to like a grandma, but I mean, I don't do 24-hour shifts. So I don't know what
Yeah.
it's like to have to value your sleep in that way. But like she has a routine. She starts her routine at the same time every night if she's home, and she's in bed by the same time if she can every single night. And she wakes up at the same time every single day. And I'm like, that must be like a medical practice correlation there between all the doctors. That's funny.
Yeah, it's time management.
Yeah.
Sometimes you don't have time to sit down and eat and have a chat. You have to, coordinate. And time management is something that we're very good at.
Yeah.
We set up our time management, program pyramid, because throughout our days, our time is just spoken for, just because that's what we're used to.
Absolutely.
And we have kids.
Oh my gosh. Kids, doctors, running huge businesses. You guys are freaking awesome. Well, so tell me a little bit more about the syndications that you guys are doing. Can we go into like a deal deep dive? Are you guys able to break down one of the most recent acquisitions that you guys just did?
Yeah,
sure. Yeah,
cool. That'd be awesome. Yeah. Which I know you mentioned you had done one earlier in the year, and then have you guys? I don't know if you've already closed on the Virginia Beach one yet or not. I don't know which one you want to go through, but
we're closing on that one in the next week, so that's the freshest in our mind. Yeah, of course.
Let's do that one. Let's underwrite. Let's go through. How did you find it? What type of things came up in underwriting that maybe were concerning? What things were you excited about? And then what this process has looked like for lining it up with lenders and raising the money and everything like that.
Yeah, so I'll start off. So this is a 75 unit deal that we got brought to us. Actually, we got brought to us by one of our broker relationships. This was a deal that had barely came on the market, but we had a broker relationship that kind of facilitated this deal. There were multiple offers, and we actually got second place.
Wow.
Right? We got outbid by another group. And when you get to this level of buying, you're going against larger investment groups, REITs, funds. So we got actually outbid and got second slot for this deal. But it's not how you start, it's how you finish.
Absolutely.
So we, 2 weeks later, we got a call from the broker. It's like, hey, are you guys free to grab some lunch? We want to chat. And so we said, of course, we always want to continue relationships, good or bad experiences. We always need our partners in this whole thing. So we went, met up with the partners. Partners brought us information to say, hey, to the grapevine, this deal is going to fall through, and we would love for you guys to pick it up. Can you make this happen?
Mm-hmm.
Right? And this is outside of us doing our 65 unit that we're currently fully gutting and renovating and fixing flips out of things. It's like so missiles everywhere, going everywhere. And we're like, okay, we'll figure it out.
I love that.
So, right. I'm going to say it's not we can, is how can we? So we go back to the lab and we start focusing on, let's underwrite this deal. And Leigh's our top, acquisitions in department. So she's going back, calling, getting on the phones, attorneys, property management. Let's get market research. Where are we at with the numbers today? Let's call our lenders. You guys still feel good about this one? So we started doing that whole entire process again.
And what was really interesting about this one was that when the deal first got brought to us, it was, I think, February, and it fell out of contract in mid-February. Okay, yeah. Well, it fell out of contract much later, and when it got brought back to us, the lending environment had changed significantly by then. So in just like a month or two, all of a sudden, I'm reaching back out to my lending broker, who's, one of the key players in getting these things done. And he's saying, well, rates are higher, you need interest rate caps, and I can't give you this price anymore, and good luck. So we're like, well, we really want this deal. How are we going to make this deal work?
Right.
And what we ended up having to do was really renegotiate that price.
Right.
And so
we had to go back.
Yeah. The offer that we ended up winning the deal.
We went with like $550,000 below where we were, with factual proof, because of the volatility of the market.
Wow.
The rate rising, and the fund that was selling was in urgent need of selling due to a 1031 exchange. So this kind of, perfect storm arrived. And we're like, we're value add guys. We add value. We had to go from long-term debt to bridge lending. which changes the underwriting
Oh
environment.
my gosh. Yeah.
So we got to make some adjustments. So did the seller if we're trying to get this deal done on time.
Absolutely.
Oh,
So
yeah.
what did that, what factual proof did you guys take back to them? What did that look like for you to say, hey, look, like this is a different environment now than it was when we were originally talking. And I'm not just trying to beat you up on price. I want to prove to you. How did you prove that to them?
It was the SOFR index rising, which
Mhm.
is the interest rates. And then also just across the board, suddenly the bridge lenders were requiring interest rate caps, which basically you pay hundreds of thousands of dollars for an interest rate cap at, X number of percentages. So you can guarantee that no matter what the feds do, your interest rate will only rise by 1 to 2%.
Mm.
Does
Right.
that make
Wow.
sense?
Yeah, I've
Yeah.
never even heard of that. That's super interesting. So
Yeah.
basically like you're locking your rate, but on like a large multifamily commercial loan.
Yes.
Right.
On a multifamily commercial bridge loan.
Right, which is floating. So
Which
you're
is floating.
locking the float, you're putting a ceiling on the floating rate essentially.
Interesting.
Right.
So you're buying, saying it can't go above this.
Yeah.
Right. And we got a bridge debt, which gives us interest only to allow us to value add as what we do best. And when we turn around in 3 years from now, all the value add is done. All the appreciation is there on the value, on the after repair value, stabilized costs. The market at that time will probably be different than it is now, be more stabilized.
Mhm.
So we can try to go into a long-term debt structure or refinance out, go into another bridge debt, do it all over again. We got so many exits here. We already have offers on the deal before we even close on it, man. Like
Wow.
this is crazy, right? But we find solutions.
I
That
love
was
that.
the point, because anybody else would run away from that
Mhm.
and think, oh man, there's no way we can raise that much capital, because we had to bring a little bit more down. There's no way we're going to get a price drop of that caliber from a fund. There's no, everybody told me that, right? I said, let's figure out solutions here. How do we get
Yeah.
this opportunity done? And both parties are going to be benefiting from it.
So what price did you guys end up locking it up for?
We got it at 144,000 a door.
Wow, that's pretty
Yeah.
amazing.
Yeah.
So
And
oh, go ahead.
And the upside on this thing is that the value add potential is heavily there. Bringing this property, because we're value adders, we bring this property to a level of our flip calibers. We're bringing a better tenant pool.
Yeah.
We're switching over we're going to rebrand the buildings. We're going to switch over the tenant pool. We're going to, these properties are blocks from the ocean front. So this is like great potential here to grow that appreciation in a short period of time. So it's kind of like a flip.
Mhm.
I mean, kind of, if you're looking at it that way.
Flipping 70, is it 70 units? This one is
75 units. Yeah, 75 units.
So cool.
3 blocks from the ocean front. I mean, like,
Do you guys, what do you predict you'll spend per unit for rehab?
great question. I get that a lot. So it's tough to really set that price, but we're kind of in between a full reno of a 2-bedroom, 1 bath. We're around in our market. What do you think? Like 14 to 18, depending on costs of wood, plumbing, electricals, appliances, cabinet, granite, flooring, paint. You know it, Noah. I mean, this stuff is going just paint's doubling, flooring's doubling. Appliances are like, what in the world? Can't find them anymore. So we will make those adjustments. So we have a flex kind of spending, but we don't have to fully gut out every unit. And by the way, did I tell you this is 100% occupied? So
my gosh, you didn't know.
We don't really got to do anything, but we're going to do it because we want to achieve and squeeze as much as we can, because the juice is going to be worth the squeeze when we're done with it.
And speaking of that, this is why you really need to know what you're doing. Especially, with the flipping and renovation experience, because the brokers are putting on their OMs. They're trying to sell you this deal saying it's only going to cost $5,000 to flip this whole unit. And, God forbid you believe them, the whole deal is going to blow up.
Right.
Yeah, you
Right.
can't trust any of the marketing material, to be honest.
No,
Like
no.
they'll put projected rents on there and you're like, yeah, if we did if we just tore the building down and built like a brand new high rise, we could get those rents.
Right.
Yeah.
Yeah,
So
and add pools and gyms and add everything else. Like,
Yeah.
wait a minute.
their rents are off, their comps are never, their comps are never correct. You know, they'll go find the best, highest use building in the area, and they'll try to say that's a comp to like a C class. And you're like, dude, that's like, you know, that's like the wealthy area. And we're over here in like the middle class area. These assets are not comparable, but they don't care. They want to sell it. That's their job. So that's a great.
You have to trust but verify, right? You have to trust but verify. They give you their marketing packet, you take it, but don't use any of those numbers until you verify them. Absolutely. Because most of the time they spend millions of dollars of getting that together, but it's their version of the truth. But everybody's got their version of what the truth is, right? Mm-hmm. So that's where the point of conversation always is there. And that's where the relationships come into play, because they know us and they're like, Vic and Leigh and 25-8 Capital, they know their stuff. We can't really throw a little, you know, blind over their eyes. They know what they're saying. So they had to just agree.
Absolutely. And I guess the one thing I would want to point out is there are deals to be had in brokers who list things that don't actually know how good it could be. I'm looking at a little 9-unit complex here in Boise, and they put in there that all the rent should be like $1,300 a month. Luckily, this episode will air probably long after it's either already put under contract by us, if it makes sense, or somebody else. But yeah, they're sitting there saying like, these are like $1,300 a month units. And I have a similar unit down the street from it that's going for $1,800 a month. And I'm like, okay, these opportunities are cool because this broker has no idea what they've actually listed and no idea what the rents could actually be. I mean, if you're talking $300 a unit, I mean, it's only a 9-unit complex, but as a cap rate multiple, like, I get nervous doing public math. This never goes well, but an extra $300 a door times 9 units, $2,700 a month times 12, 30, it's an extra $32,000 a year, right? So I have I don't know, 25% expense ratio on that. So I'm only going to collect 75% of it. And the Boise market's still holding at like a 5 cap right now. I don't know. We'll see how long that lasts, but we're still holding at a 5 cap. So technically that should be just the extra $300 a month that they are not predicting in rents would be an additional $486,000 in value at a 5 cap.
Exactly.
That's not even rehabbing the property. This is raising rents to correct market rent. So yeah, also watch out for that. That brokers sometimes don't know what they're listing.
That's the diamond in the rough. That's why where everyone's saying there's no deals out there. There are deals out there. You just have to find them.
Right. And the great thing about what we're doing is that in commercial side of things, the returns are made on the value that's added on that NOI, net operating income. So you can have a property that someone sees it one way, but we look at it and say, man, we can force the appreciation, raise the value, not only for the tenants, but also for the investors, because we can move that car forward. Similar to the fix and flip side of things, right? It's value add. You find our diamond in the rough, you buy it at a certain price, you renovate it, put it back in the market for a profit. It's similar. And so that's why we're kind of look at ourselves as value add, not momentum guys. I just buy and then switch keys. Yeah. Most of the brokers are just momentum guys. We kind of have a little bit of a spin on it because we have the experience.
Yeah. So on this this Virginia Beach deal, how much did you guys have to raise in private capital for that deal to make that happen?
$3 million.
That's an incredible raise, by the way. Like that's huge. So you guys have really dialed in.
That's after closing on a 65-unit deal 2 months prior ago.
So cool. What does that look like? What does that outreach look like to go raise that capital?
Yeah, so we reached out to our local network of investors that we currently work with already. Okay, so we had put together the deal deck of the investment opportunity with all the numbers, and we reached out to all of our investors to get their palate for this. Or we reached out to them and said, look, right now, the stock market dropped. I'm out of money. I can't, do this right now, but I may know somebody that does. Right. So then referral, word of mouth, open up that way is kind of how we focused our game plan on investor relations and capital building. We want to know each investor one-on-one, so we kind of built that nucleus of investors that way.
I love that. And I think that's the most impactful way to do it. And really what it shows is it's a testament to your guys' ability to take care of your investors at every level, every single time, right? So they invested with you in the single family fix and flip world, which by comparison to the syndication world is small, right? So those guys are probably generally putting in somewhere between, I'm guessing, 50,000 and 300,000, depending on if they're funding your down payment or the whole project. And then all of a sudden they go into this syndication world where an individual investor can invest any amount, right? Like you could have had 3 investors that each invested $1 million.
Right.
But it started off with you guys building a track record and getting trust and giving everybody a track record of like, hey, look, we perform at this level and at scale. We can do this. It's not going to be a problem. I think that's cool. It's a testament to your guys' ability to take care of the investors.
Thank you.
Thank you.
Absolutely. Well, guys, let's tie up the end of the show. I have a series of questions that I love to ask my guests because I think it helps the listeners achieve financial freedom faster by hearing it from you guys firsthand. So the first one is, what is your guys' idea of chasing freedom?
Time freedom. So, like I said, we're working 40 to 80-hour work weeks, 14-hour shifts in the clinic. I wouldn't even see my kids. I would go to work before they woke up and come home after they went to bed. And I had to work Christmas. I had to work Christmas morning. I had to work Thanksgiving. I had to work Halloween. I missed all those holidays. I'm missing out on my own life. And so real estate has given me the time freedom to arrange my schedule to live it the way I want to. Today, it's a Wednesday afternoon, and I got up early. I did my work this morning, doing this awesome interview with you. Right afterwards, I'm going to go swimming in the pool with my daughter.
That's awesome.
And that's, it's the little things in life that I really cherish with the time.
Right.
I love that. And yeah, I heard you just retired, right?
Yes.
From the medical industry. That's so cool. Congratulations.
Yes.
That's cool. Cool. Victor, what's your definition of chasing freedom?
So, how do I say? So I grew up in a low income, blue collar family. I'm originally from Brazil, immigrated to the States when I was a young kid. And, my parents, both worked long hours, multiple jobs. They did the best they could to get me to the point that I am allowed to be here today. Right. And so my chasing freedom and my purpose is to bring the generational legacy and change the path of my family for the future.
Yeah.
And for everyone around me. And that goes deeper than just like talking about money. We're talking about changing the path in which your family will go forth.
Yeah.
And the opportunities that they may be able to get in the future. And generational, meaning beyond my kids, my great grandkids will remember us for that catalyst, that trigger. And that's what I focus on, is changing the path in which I was given and lifting and scaling our families into a better place for the future.
I love that so much, man. It's one of my main motivational drivers is I will be the fork in the road that changed everything for the generations to come. It's super impactful for me. Yeah, I love that. Definitely resonate with that. So the last 2 questions, do you guys have any books or podcasts or anything that you're currently consuming on a regular basis that's helping you to grow and scale your businesses? And we can go, Leigh, do you want to maybe share like a podcast, and then Victor, we can come back to you for a book?
Well, I'm more the podcaster. She's more the read.
We'll swap it. Perfect.
Let's see, I just read Building Your Story Brand. It's by Donald Miller. And it's really just about developing your story, who you are, how you want to make other people feel. And it's a way of connecting better with our investor base. Right now, who we want to help are people like us. We want to help busy professionals. We want to help working parents. We want to help people who don't have a single second in their day to do anything more than what they're doing. And we want to give them that freedom. So that book just helped me be able to speak to those people a little bit more.
Yeah, I love that. I really resonate with that. I think that's really cool that you're going back after helping the other people that are still probably stuck where you guys were once stuck. And we're like, dude, let's work to get you out of there. It's going to take time, but let's start. We have to start today and get them some passive income and build it and cycle it. And then tying it back to the beginning of the show, also providing them some tax benefits and shelters, so they're not just giving it all back away. I think that's cool. I love that. And Victor, what about a book that you'd recommend, or a podcast?
I listen to a lot of different podcasts. One of my big mentors, Trevor McGregor, he's just a mindset guy. His podcast, you guys should listen to it, focuses on the mental performances of things. He's famous for saying that all of this that we're doing is 80% psychological, 20% mechanical.
I love that. Yeah.
And you need to make sure that you focus on your mental strength and clarity and certainty and confidence in what you're doing, because a lot of this stuff is your own self-limiting beliefs. And so once you work through these negative thoughts that you have, and you have the I will, I can, I must, I require it, then it changes the way that you go about your business. So that's one that I would definitely recommend to everyone. And then I'm going to plug in our podcast, Ninja Investment Strategies. We're on there, and we kind of set it up more of a group discussion podcast, but we focus on the strategies that we personally have used from the beginning to now that nobody really explains or talk about in the nitty gritty, whether it's finding and mobilizing money that you never knew you had, using tax sheltered accounts like self-directed IRAs, 401ks, self-directed 401ks, using funds and trusts, things that you can use to kind of ninja your way through things. We talk about different strategies with high net worth individuals and things like that. So Ninja Investment Strategies, look out for that on iTunes and SoundCloud and all that. So that's another one I recommend.
I love that, man. I love you guys are so methodical in how you tie all the pieces together. And the one thing that's evident from this 45 minutes I've gotten to spend with you is that the primary goal for both of you guys is really adding value to people's lives.
Exactly.
Yeah, we want to benefit people's lives, educate, push them, motivate them. We do this all together. Everybody just thinks it's Leigh and I, but we have a whole entire army behind us that pushes us forward. And everybody's got to push that wheel down the road so we get to where we all are together.
Absolutely. And I feel like too, like what's that saying? A rising tide lifts all boats, right? So as you guys are out there being the tide and moving this level of expectation of performance and what you can achieve in life, you're bringing everybody else up with you.
Yeah, exactly.
Cool. Well, guys, this was a super fun episode. If the guests want to get a hold of you or reach out or talk about doing deals or partnering up together on stuff, what's the best way to reach you?
So check us out on our website. It's 258cap.com. You can also reach us at info@258cap.com.
Instagram, Facebook, TikTok, YouTube,
everywhere.
LinkedIn,
I love
258cap.com. We also have our fix and flip side of things we do at LVR Investments.
Okay.
You can find us on Instagram as well. We do a bunch of content creation, educational, day in the life. We try to get that stuff to have everybody have the experience from wherever they're coming from, just to know that we're all normal people. We all got normal lives. We have good days and bad days. And so we kind of just show that side of things as well.
Yeah, I love that. Well, we'll put a bunch of those links in the show notes for anybody listening. You guys will be able to click there and get in contact with Leigh and Victor. Thank you guys for your time coming on the show, sharing this wealth of knowledge. And I have no doubt people are going to want to reach out and connect. So I'm excited for that. So thank you guys.
Thank you, Noah.
Thanks, man. Appreciate it.
All right, guys. We'll see you later. All right. Thanks for tuning into this week's episode, you guys. For more awesome real estate content, you can check out my Instagram. It's just Noah_Evans_real estate. It'll also be in the show notes. If you want to reach out to the guest, their contact information and websites and however else to get a hold of them will also be in the show notes. All of our podcast episodes get thrown up to YouTube. And for more awesome exclusive content, please go check out the website. We'll have that link in the show notes below as well. All right. Peace.